the collapse of Silicon Valley Bank, the effect that has on your money, and the ripple effect it will have on all the other banks. And also the budget in the UK was declared last week by Jeremy Hunt. Hi guys, welcome back to my channel. So lovely to have you here today. My name is Carina darling. I work with professionals across capital cities in the world. I help them navigate life stress-free. Today's topic is one that everyone is talking about, and I can't wait to dive straight into it. But before I go into this topic, I would really appreciate it if you can just subscribe, like the videos, comment, share with your family and friends. There's about 70% of you who watch my videos every week, but you're not yet subscribed. I would love for you to join the community. Today's topic is for us to discuss the collapse of Silicon Valley Bank, the effect that has on your money, and the effect that would have it on other banks, and also the budget in the UK was declared last week by Jeremy Hunt, and we're going to explore that budget in this video. So it's an exciting video to be tuned into. I want you to stay to the very end because I'm going to talk about the collapse of Silicon Valley Bank, the effect that has on your money, and the ripple effect it will have on all the other banks. If you haven't seen in the news, Silicon Valley Bank is the 16th largest bank in the US, and this collapse is one of the biggest in history. Where does that leave consumers? Where does that leave my community? You may remember I talked about do not leave your money in the bank, and this is what I'm going to explore even more on the collapse of Silicon Valley Bank. Many tech companies use SVB, as they like to be known, to keep their money, and it happened that these tech companies decided to go to the bank to request their money, and by doing that, Silicon Valley Bank did not have enough money to be able to pay out to all of its customers. So today we're going to explore why the Silicon Valley Bank collapsed, because their customers, who are the tech companies and startup companies, were coming in to request for money, and they did not have enough money in their reserve to be able to pay their customers. There's something called the fractional reserve banking, which means that banks are not required to keep all of the money that you deposit into their business for you. Yes, of course, you may say to me, but when I look at my balance on my phone, or if I go to the cash machine, I still see the same money. That's absolutely correct. However, banks are required to keep roughly 10 to 20% of the money that you deposit. The rest of the money, they use it to invest. And this was because previously they had invested in a number of investments which did not yield the result that they would have liked. You may say to me, what did they invest in? They invested in bonds. Governments issue bonds as a way to raise capital. And a lot of times government bonds are safe investment. But in this scenario, with the interest rates going up, with all of the inflation issues, with challenges happening in the economy, the bonds became very risky and could not give the same return as they initially thought. So the bank then had a hole in their account, which is up to the value of 170 billion. And in that case, usually what happens is the bank would file for insolvency and the whole process would commence. However, in this case, and in regards to Silicon Valley Bank in the UK specifically, the Bank of England and the government stepped in and rescued the bank by bringing in HSBC, which is another bank, to then take on this struggling bank, Silicon Valley Bank, and ensure that customers were not out of pocket. And so that was something the government had to do and step in immediately to prevent this huge financial crisis from happening. So guys, how does this impact you? Point I'm going to put here is that to ensure that this does not affect you, because Silicon Valley Bank is probably not the only bank that is going to go bust in the next couple of months. We also heard in the news that Credit Suisse was also having struggles. The Swiss bank had to step in immediately to assist Credit Suisse, otherwise they were also going to come to the verge of collapse. There is something called the Financial Services Compensation Scheme. This basically ensures that if you have deposited a sum of money up to the value of 85,000 into your bank account, you are guaranteed to get that specific amount or all of that money back if a bank did go bust. So my advice to all of my community is ensure that you do not put more than 85,000 in any one bank. If you have that much cash, spread it across various banks to ensure that you have your money intact if there was an issue. If it's an account that is jointly owned, individually you get 85,000 back. Outside of that, you're not guaranteed that sum of money. So ensure that you're not putting loads and loads of money in the bank, because if they do go bust, you will suffer the effects of it, which is that you would not be able to be withdrawing all of your money. The budget in the UK was declared last week by Jeremy Hunt. It was very clear that there are a couple of winners. One of them is childcare. So currently in the UK, this childcare provision was only available to 3 years and 4-year-olds. So if your child was below those age or above that age, you wouldn't be getting any childcare. And that basically means you get 30 hours of free childcare a week, which is quite a lot for a lot of working parents. That's usually the time when they are at work. So what has happened in the last couple of years is that parents have had to weigh the possibility of one parent staying at home and the other working just because of childcare issues. It's quite expensive in the UK to pay for childcare, and if you think about it, sometimes some people, what they earn in a month is equivalent to what they pay for childcare. The government has seen the gap in the economy because of this. There's so many working parents that are not able to go to work because they have children, and so this spring budget was able to identify that and gave more to parents. It doesn't come in immediately, it is staggered, but the full effect of it will come in 2025, which covers every child from 0 to 5-year-old. They will be getting 30 hours a week of free childcare, which frees up the parents to then go and be able to work and pay tax and grow the economy. The other winners are the pensioners. So you know, my previous videos I've talked a lot about pension, and pension is something we need to think about as young people, because if we live long enough, that time will come and we need to have something kept for ourselves to be able to look after us. I mentioned that there is a threshold. That threshold is if you have £1,073,100 in your pension pot, anything above that you're going to have to pay tax. The good thing about the spring budget this year is it looked at that gap and it removed it totally. So now there is no threshold. You don't have to stop working after you have hit your pension target where you don't have to pay tax. And why is the government doing this, you might ask? It's because there are quite a number of people in their 50s who have managed to build up a portfolio of pension or property where they've gotten to that stage where in their pension pot they have hit that threshold, and anything above that they would have to pay tax. So they've decided to stop working, which is a very sensible thing to do. Now the government wants these people in their 50s to return to work, and by doing that means that they pay more tax and they can then put more money in their pension pot. Another aspect of pension that is a winner in this springtime budget is the annual allowance. Annual allowance is the maximum amount you can put in your pension pot every year. Currently in the UK, it's been 40,000. Now in this springtime budget, the Chancellor of the Exchequer, who is Jeremy Hunt, has changed that and given people liberty to put more money into their pension pot per year. So that 40,000 has now moved on to 60,000, where you can afford to put a bit more into your pension. You have the liberty to now put 60,000 into your pension every year instead of the 40,000. This is a good incentive for people who are higher earners in the UK, because there is now a tax for people who earn over 125,000 a year. Previously it was 150,000 that you had to earn for you to start to pay 45% tax. If you are a high earner, you don't want to be affected by the higher tax bracket, putting into your pension pot is a good way for you to go below that threshold. Do not forget to watch the next video I'm going to tag here, because that talks about what you can do in greater detail if you want to protect your money in the bank, and I'll also be linking it below in my video. So on that very good note, have a great week guys, and see you in my next video. Bye now.